Welcome back. Let's get into the market picture very quickly now. In a series of tweets by Donald Trump playing up the chances of a trade deal with China provided a much-needed boost to Asian equities this morning. But investors trod very cautiously as analysts warned of more volatility to come. After more than doubling tariffs on $200 billion worth of Chinese goods last week, sparking retaliation from Beijing, the US president has now threatened to hit a further $300 billion worth of more levies if he does not get his way in high-stakes talks. The Tokyo's Nikkei moved 0.6% better off, closing today as trading at 21,188. The Hang Seng is at 28,268, managing there to gain 1%. The Shanghai Composite, the biggest gainer, moving up 1.9%, still closing below that 3,000-point mark. Let's move on over to the United States, where Wall Street stocks finished solidly higher on Tuesday, bouncing from the prior session's rout amid ongoing uncertainty over the prospects for a US-China trade deal. Major US indices had lost more than 2% on Monday after retaliation by China on the trade spat. Trump yesterday called the escalating dispute with China a little squabble, but said Washington was still considering extending tariffs on another $300 billion worth of Chinese merchandise. Dow Jones Industrial up 0.8%, winning back 1/3 of Monday's losses. S&P 500 also climbing up 0.8%, that's at 2,834, and the tech-rich Nasdaq Composite 1.1% to the good at 7,734 points. Global markets have obviously been taken aback by just how deep the scenario has gone with regards to China and the United States. President Donald Trump is also expected to sign a waiver which may see that dealings with communication companies which pose a threat to security and violence within the United States will not be dealt with when it comes to the United States. And that means that a deal with Chinese company Huawei may be forbidden when it comes to the United States. So that's said to be a big deal. But let's check in on how markets are faring across the board. Most of Europe sitting in the red, however, and not managing to take on the gains that we saw come through from the United States yesterday, flowing through into today's trade, particularly this morning in Asia. So the rest of the world, unfortunately, catching a cold as things seem to head slightly better when it comes to those two markets. Featuring onto the South African market, also falling down over 1.1%. Look at that. The all-share headed back towards their 55,000 point mark. Of course, industrials would have thought that perhaps gotten some positivity with Naspers perhaps faring slightly better, considering that Tencent had a better day out in Asia this morning. But it was not to be, as a widespread sell-off certainly did hurt the markets. Continuing with these indices as well, then, as you can tell, resources going down, but the gold stocks seem to have headed a whole lot higher there, with platinum indices going down as well then today. The resource indices as well, as you can tell, the commodities, the gold price sitting just below that $1,300 a fine ounce mark, platinum at $851. Brent crude having gone down, that certainly would be a good mark for South Africa, still below that $71 a barrel mark. And over onto your currency picture as well, one we've certainly been worried about that rand, but for now 14.24 against that US dollar, 18.39 for a British pound, and a slightly better mark for the euro at 15 rand and 95 cents. So let's continue to unpack that market picture now. We've had a few earnings sentiments and issues come through as well. Transaction Capital putting out their earnings as well this morning. The minibus taxi operation seemingly helping that company do fairly well. 17% uptick in earnings. We chat now to the CEO, David Hurwitz, who joins us live from the Johannesburg Stock Exchange. Mr. Hurwitz, thank you so much for the time. It's a good set of earnings. Do you think it's sustainable?
Yes, we're very happy with the earnings. Earnings up 17%. That's both headline earnings in rands and per share. Yeah. And our dividend up 29%, up to 27 cents per share. And we've actually listed about 7 years ago, and over that period we've grown earnings at about 20% per annum, and dividends have grown at about 35% per annum. So if you look back at history, certainly this is sustainable, and looking forward, we have great strategies in place. We also have a very strong balance sheet with R1 billion of excess capital, which should enable us to sustain our growth rates at least at these levels.
Yeah, the worry may certainly be that with the minibus industry sector, you may not necessarily know exactly what you're getting yourselves into, but you have been in it for quite some time now. Do you still see growth in that sector, having gotten, what is it, a 31% growth in that sector just for this period?
Yes, so first of all, we've been in it for almost 2 decades, and we have got data on the industry to score the type of risk that we take. We understand the routes taxi operators are driving. We have Santaco as a large shareholder who also assists us, and we're very comfortable with the risk that we take in that space. It's a vertically integrated business model. The real growth is coming out of that business in newer initiatives. Our insurance business is only 5 years old, and we see an unbelievable growth rate in that business. Yeah. Together with some of our retail initiatives, we started off selling cars, both new and pre-owned, which we then finance and insure. But now we've also extended that into parts, which will give us good growth going forward. And then finally, we are also looking at various rewards programs, which allow our clients to participate in their spend, be it on petrol or on tires or on parts. And that too is giving, first of all, a great deal to our clients, or a great value proposition to our clients, but also a nice earnings kicker for us. So we really are comfortable with the growth rate in our taxi division.
Yeah. One focus is then, if you take a look at that parts division, as you were speaking about there, which becomes another focus for you. Are you fearful that with commodity prices perhaps where they are, it may not necessarily be a spin-off that will help later on? And I know it is a far cry, but it certainly is an issue to consider. Does that play a part at all in your business?
Well, really what we're able to do there is we are able to import parts directly from source and retail that to the market at a much lower cost. So that margin between importing directly and the sales price of parts in the country allows us a great margin for safety. Secondly, what we do, which is more important, is that we refurbish vehicles, and certain vehicles we actually can't repair, and those vehicles that are not repairable go into our salvage business, and we then refurbish those parts and retail those parts as approved used parts back into the industry. And again, there is good margin for us at a very valuable proposition to our customer base.
Yeah, you've made note very specifically of the areas you'd like to grow. Is South Africa the only place you're looking to maintain sort of that growth level? How far can the business go outside of South Africa?
In terms of our taxi finance or taxi business, really we see great growth within South Africa. There are opportunities internationally, but for the meantime that business is really focused in South Africa. If you look at our risk services division, transaction capital risk services, there what we have is a highly sophisticated and highly efficient business in South Africa, and we moved into Australia and have replicated or exported some of our skills. We've got great data, we've got great analytics, and we've invested heavily into technology, and we have exported that into Australia, and our business in Australia is actually doing very, very well. So that's one area of expansion, and we're now starting to look also at other areas internationally in specialized finance, with a few smaller investments starting off in Europe.
Yeah, all right. Well, Mr. Hurwitz, appreciate your time. Good luck with the rest of it, of course, and we'll continue to catch up and see how things fare, but really appreciate your time as well this afternoon. Now, as we unpack exactly how the market felt about the company's earnings, we bring in Makwe Masilela then from Makwe Fund Managers as we get a hint of how things fared. Makwe, you heard what Mr. Hurwitz said. You think the business itself is perhaps on good footing considering South Africa's economy, the state of South Africa's taxi industry as well? Good business to get into?
Sure, definitely. I mean, to think that almost 69% of our population are using the taxis. Yeah. I mean, that transporting almost 15 million people. And I think it was very strategic for them, even though it was at a very late stage, to include Santaco to become a shareholder as well. I think they hold 25% or so.
Correct.
And you know, at a portfolio of almost 10 billion, I think they're not doing that badly. And like he said, they've got almost 1 billion that they will be able to put back into the market if need arises. And you know, it's also important to have some other revenue streams, insurance, parts, and I thought maybe they'll get a challenge when it comes to parts because you get these no-name brands, but the way they're getting their parts and the margins, I think they should still do okay.
Certainly a good sentiment then for the taxi industry. Do you see it, however, picking it up, boosting South Africa's taxi industry? I mean, they have around, I think it's 31,400 odd vehicles under their name, and it's definitely not all of South Africa's taxis by any stretch of the imagination. But does that sort of create an environment that is helpful for South Africa's taxi industry?
It does. Like you said, 31,000, we know we've got lots of taxis that needs to be financed. So for me, that I see that as a growth potential that they stand a chance to be able to finance more going forward.
Yeah. Okay. Let's head on off to another company now. MTN. Of course, they've had quite a few issues, not necessarily in South Africa, but across everywhere else, things certainly go bad for them, particularly in Nigeria. Sure. And now the Nigerian authorities saying, yep, we've given you approval. You can now list on the Nigerian Stock Exchange. Not surprising, but how helpful does that become to the business?
Not really, because to think that this is what we call an invitation listing, meaning they're not issuing new shares, meaning they're not selling any new shares, so they're not raising any capital. They're taking existing shareholders, they're listing those shares. But it's interesting because I think they were forced. You know, it's not their choice, because remember, it was part of the fine after they were found guilty of not registering those SIM cards, stuff like that. Yeah. So it's not like they're doing that willy-willy, but they're saying at a later stage, they will only then do an IPO. But Nigeria continues to be important for them to make sure that the companies are transparent, to make sure that they are attracting new capital, because they're still making a significant portion of their earnings from Nigeria.
Yeah, and it doesn't necessarily change the way they do business there, right? They've already entrenched themselves there. This perhaps just helps the relationship.
And there's still that cloud hanging when it comes to that 2 billion tax that they're still arguing with the Attorney General. Yeah. But remember, 2 weeks ago, they announced that they're going to appoint an international advisory group with people like Thabo Mbeki, the former Uganda or Ghana president. I mean, serious people. Hopefully, they will help them, you know, to be able to navigate their way better when it comes to the African markets and especially the Middle East market.
Yeah, it becomes a difficult one for them in that space. But nonetheless, we can shift attention very quickly to the story that's probably taken over global markets more than anything else right now, China and US and that trade situation. Global markets coming up on that, and specifically US and Asia, as you can tell, as you saw a little bit earlier on, Europe and South Africa fairly down. What's putting up the disparity between the two? Asia, the US going up, but Europe and South Africa, however, on the downward path?
I think Asia, it was more of a catching up. Remember, yesterday it was a better day, you know, even for us as well, though we still ended the day lower. But it was more of a dead cat bounce, you know, because it was a question of Donald Trump softening his tone, saying, like you said, Ayla, it's more of a squabble, not that the talks have collapsed. So, and markets, if you look what the New York Fed is saying, there is this gauge that they're using, looking at the probability of a recession in the next coming 12 months, is sitting at almost 27.5%. That is the highest that we've ever seen since the financial crisis. I think markets are also looking into that as well. And we know that if this continues the way it is, definitely it's going to take off some of the percentages when it comes to global growth.
If we had the same sort of index measuring South Africa's likelihood of getting into a recession, considering we got into one last year, which was the first since the 2009 financial crisis officially, you had unemployment coming out yesterday, 27.6%. Your manufacturing is in the doldrums. Your mining has continued to lose some. Business confidence has languished. Load shedding has happened, all in the first 3 months of the year. Is there any growth in the first quarter of this year?
Voter turnout as well, it was low as well. So apparently everything is low. But I think it's more of going forward, and I think it's more of trying to improve sentiment. If Ramaphosa does what he's promising, because it's more a question of boosting our investor confidence, and we know they must stop saying it, that they need to grow the economy. They definitely have to tell us exactly how can they do that. And one of the easiest things is to make sure that maybe we can become a tax haven, who knows, that will be able to attract businesses to come back home here and build factories and hire the necessary people. It's not going to harm us to reduce tax. Then you reduce that, then you get more companies in there, meaning you increase your tax base.
Yeah, right message sent though with regards to the land issue. Ramaphosa speaking earlier today, saying that investors, don't worry, it's just that the original sin must be dealt with.
which is proper. And so far, I think they're handling it okay, but they're still waiting for the final detail, because so far we've never seen a funny reaction, especially coming from the investors. But IMF continues to highlight that it might be a possible headwind for economic growth going forward.
Makwe, appreciate your time. Thank you so much for joining us as well this afternoon on SABC News, of course. Makwe Masilela there from Makwe Fund Managers, giving us that breakdown of how markets are faring right now. After the break, we get into the latest from the Public Investment Corporation's inquiry as well. Things continue to escalate, and our very own Gloria Sefako Musi is there. So stay tuned for that. This is On Point.